Hey everyone, welcome back to Corporate Decoder. Today we're diving into the world of offshore oil tankers with a look at Not Offshore Partners' latest annual report. You know, sometimes these reports are so long, you might need your own support vessel just to get through them. Let's see if we can make it more interesting. Not Offshore Partners owns and operates specialized shuttle tankers, basically floating pipelines that transport oil from offshore platforms. They're kind of a big deal if you're drilling in the middle of the ocean, but recently they've been facing some financial rough seas. So we need to see if they can chart a better course. Let's jump right in. This is a Form 20F, which is what foreign companies file with the SEC to give investors updates on their business. First up, the usual forward-looking statements. Companies are required to say, hey, this is what we want to do, but things might change. Now for the meat of the report. This report is for the year ended December 31, 2024. This just mentions the company's file number. Now let's look at how much stock is out there. It mentions nearly 34 million common units, over 3.5 million in preferred units, and 250,000 in another type of unit called Class B. This is just a table of contents, nothing to worry about here. Let's look at the risks section. This is usually where a company tells you all the things that could go wrong. I'm scrolling fast, but these things are generally standard. It says that if things do go wrong, they might not have enough cash to keep paying the distributions, the cash payouts to investors. It also mentions that they reduce the amount of their cash payout to their investors. If investors don't get paid what they think they should get paid, they might sell their stock, and this could impact the ability to raise capital down the line too. Also, their debt agreements could keep them from doing some things they want to do. Another risk is that their charters, which are the contracts for their ships, could be terminated early. That would be bad. Another big risk is that they only have a few customers. Losing even one or two could really hurt them. A broader risk is that the overall economy could affect them. Inflation, interest rates, all of that can throw a wrench in the works. Since they are international, they are also exposed to global events, terrorism, political or governmental instability. Piracy on the high seas is also a thing that companies must consider. These days, everyone needs to worry about computer hacks. Also, their parent company and related companies could end up competing with them, which could be awkward. Here's another risk. They have certain arrangement with their general partner that limits how much management has to care about the small shareholders' needs. Now, let's look at the bigger shareholders, the people who own a lot of the company. Not owns a big chunk, about 26%, and the rest are smaller investors. This section talks about what happens when the company does business with people connected to the company. To summarize, there are rules to make sure they aren't ripping off the company. This is about market risk, such as what would happen if there are large changes in interest rates or exchange rates. Long story short, these changes could hurt them. Alright, scrolling to the financial tables section. This is the most important part of the report to see how they did. Alright, let's break down the income statement. Of about 11%, an increase of 30 million. Doubled, an increase of 3 million. Also up a 16% increase. Was down, these are all accounting changes, so we won't focus too much on that. And 7%, which is good, the most important part is to see what this means for the company overall. Net income was actually positive this year, a $14 million profit, which is a lot better than last year's $34 million loss. Okay, now the balance sheet, let's look at the debt here. The total long-term debt is at about $910 million. Let's get down to quantitative, qualitative assessments. Alright, scrolling down, so what does all this mean? This report paints a picture of a company trying to steady the ship. Revenue increased and loss higher, insurance recoveries are helping. They have debt and economic issues to navigate. There's a lot of uncertainty with the oil and tanker markets overall. As it stands, Not Offshore Partners is at a crossroads. The global shuttle tanker market will determine whether they can turn things around and sail towards smoother seas or stay on choppy course. For value investors, this could be an interesting time to watch, so be sure to stay in touch with those developments. Thanks for watching. If you enjoyed this video, be sure to like, subscribe, and let me know what company you want decoded next.